It happened. The single event that every silver analyst has feared. The one scenario that the bullion banks prayed would never come. The nuclear option that changes the entire global supply chain overnight. China just cut off the world. Not a rumor, not a threat, not a negotiating tactic. An actual implemented official export ban on refined silver leaving Chinese borders. For years, we speculated about this possibility. We said China was stockpiling. We said they were building strategic reserves. We said one day they would stop exporting and start hoarding. We said when that day came, the Western financial system would face a reckoning it could not escape. But that was theory. That was analysis. That was reading between the lines of import data and shipping manifests. Well, stop reading between the lines. Because this week, China made it explicit. They published the decree, they activated the controls, and they sent a message to every government, every bank, every manufacturer, and every silver investor on the planet. The free flow of silver is over. Welcome back to the Hidden Mint. I'm going to walk you through exactly what China just did, exactly why they did it, exactly what it means for global supply chains, and exactly why this is the most bullish event for silver in the last 50 years. But before I do, I need you to understand something. What I'm about to show you is not a drill. This is not a temporary measure. This is the beginning of a new era in commodity warfare. An era where physical resources trump paper promises. An era where the nations that control the metals control the future. And if you are holding physical silver right now, you just became a strategic asset holder. Let us begin. 4 days ago, the Chinese Ministry of Commerce published an updated export control list. This list specifies which goods require special licenses, quotas, or outright prohibition for export. Most Western analysts do not read these documents. They are published in Mandarin. They are buried in bureaucratic language. They are designed to slip under the radar of mainstream financial media. But I have sources who read them. And what they found made them call me at 3 in the morning. On page 12 of the updated control list, under the category of strategic minerals and refined metals, there's a new entry that was not there before. Let me translate it for you exactly. Quote, refined silver, silver powder, silver compounds, and silver-containing alloys above 50% purity are hereby designated as controlled export commodities effective immediately. Export licenses will be issued only for pre-approved bilateral trade agreements and domestic industrial priority allocations. End quote. Read that again, slowly. Refined silver, silver powder, silver compounds, silver-containing alloys. Everything that matters for industrial use is now controlled. Export licenses will be issued only for pre-approved bilateral trade agreements. Translation, if you are not a friend of China, you are not getting Chinese silver. Period. Now let me show you why this is an extinction-level event for the Western silver supply chain. China is not just any silver producer. China is the silver producer. They refine approximately 5,500 metric tons of silver per year. That is roughly 177 million ounces. That represents approximately 22% of global refined silver supply. But here is the critical detail that most analysts miss. China does not just produce silver from their own mines. They are the world's largest silver refiner. They import raw materials, concentrates, and doré bars from mines all over the world, particularly from South America and Australia. They refine that material in their state-of-the-art facilities, and then they export the finished product, or at least they used to. With this export ban, China has effectively captured not just their own silver production, but a significant portion of global refining capacity. Mines in Peru that used to send concentrates to China for refining now have nowhere to go. The refined silver that used to flow from Chinese ports to Western markets has stopped. The Western world just lost access to 177 million ounces of annual supply. Overnight, with no warning, and no negotiation. Let that sink in. The global silver market was already in deficit. The Silver Institute documented a 184 million ounce deficit last year. Demand was exceeding supply by 184 million ounces, and we were drawing down stockpiles to fill the gap. Now remove 177 million ounces of Chinese supply from the equation. The deficit just doubled. We are now looking at a potential 350 million ounce annual shortfall. That is not a market imbalance. That is a supply chain collapse. And the Chinese government knows exactly what they are doing. Now you need to understand why China made this move. You need to understand why silver is not just another commodity. You need to understand why this metal is the linchpin of the entire green energy transition and the modern technological economy. Silver is not gold. Gold sits in vaults. Gold is hoarded. Gold is monetary, but it is not industrial. If every gold mine on Earth stopped producing tomorrow, the economy would continue functioning. The existing above-ground supply is sufficient for monetary and jewelry purposes. Silver is different. Silver is consumed. Let me walk you through the industrial applications that make silver irreplaceable. First, solar panels. Every single photovoltaic cell requires silver. The silver paste creates the electrical pathways that convert sunlight into electricity. There is no substitute. Scientists have been trying to replace silver in solar cells for decades. They have failed. The unique electrical conductivity, the thermal properties, the ability to be applied in microscopic layers, nothing else works as well. The solar industry consumed approximately 161 million ounces of silver last year. That number is growing at 15% annually. By 2030, solar alone could require 300 million ounces per year. Second, electric vehicles. Every EV contains significantly more silver than a traditional combustion engine vehicle. The electrical contacts, the battery connections, the charging infrastructure, all of it requires silver. A single EV charging station uses more silver than an entire conventional gas station. Third, 5G infrastructure. The telecommunications revolution runs on silver. Every 5G antenna, every base station, every satellite connection uses silver components. The rollout of 5G and eventually 6G will require hundreds of millions of ounces over the next decade. Fourth, artificial intelligence. This is the application most people do not realize. AI requires massive data centers. Those data centers require servers. Those servers require connections. Those connections require silver. Every AI query you make, every ChatGPT response, every automated process is enabled by silver somewhere in the hardware chain. Fifth, medical applications. Silver is antimicrobial. It is used in wound dressings, surgical instruments, hospital surfaces, and medical devices. As antibiotic resistance increases, silver becomes more critical to healthcare. Sixth, water purification. As global water stress intensifies, silver-based purification systems become essential infrastructure. Billions of people in developing nations will require clean water. Silver provides it. Now here's the critical point. In all of these applications, silver is used in tiny amounts. A solar panel uses about 20 grams. An EV uses about 50 grams. This means that even a 100% increase in the silver price adds minimal cost to the final product. A solar panel that costs $200 to produce has about 15 worth of silver in it at current prices. If silver doubles to $60, that adds $15 to a $200 panel. A 7.5% cost increase. No manufacturer is going to stop buying silver because the price doubled. There is no substitute. The price is not the constraint. The availability is the constraint. And China just constrained availability for the entire Western world. This is the key insight that most analysts miss. Silver demand is price inelastic. Industrial buyers need the metal regardless of cost. They cannot substitute. They cannot wait. They have factories to run, products to ship, contracts to fulfill. When supply drops and demand is inelastic, price does not rise gradually. Price gaps up. Price spikes. Price goes vertical. China understands this. They are not stupid. They are not banning exports to hurt themselves. They are banning exports because they need every ounce for their own industrial machine. They are building more solar capacity than the rest of the world combined. They are manufacturing more EVs than the rest of the world combined. They are deploying more 5G infrastructure than the rest of the world combined. And they have looked at the numbers and concluded that there is not enough silver on the planet for everyone. Someone has to go without. China has decided it will not be them. Now let me explain the geopolitical dimension of this decision, because this is not just about commodities. This is about power. For the past 3 years, the United States has been waging economic warfare against China. Export controls on semiconductors, sanctions on technology companies, tariffs on manufactured goods, restrictions on investment. The goal was to contain China's technological rise, to choke off their access to advanced chips, to slow their development of artificial intelligence and quantum computing, to maintain American technological supremacy. But here is what the geniuses in Washington forgot. Technology requires materials. You cannot build chips without rare earths. You cannot build batteries without lithium and cobalt. You cannot build the renewable energy infrastructure without silver. And China controls all of it. While America was focused on designing chips, China was focused on controlling the physical inputs that make chips possible. While America was sanctioning Huawei, China was buying silver mines in Mexico. While America was banning TikTok, China was stockpiling strategic metals in government warehouses. This silver export ban is not an isolated action. It is part of a coordinated resource strategy that includes rare earth elements, gallium, germanium, graphite, and now silver. China is sending a message. You want to contain us technologically? Fine. We will contain you materially. You need stuff to build things. We have the stuff. Good luck building your green energy future without our cooperation. This is the weaponization of supply chains. It is the next evolution of great power competition. And silver just became a strategic weapon. Now let me connect this to what is happening in the silver market. For the past decade, the price of silver has been suppressed through paper derivatives. We have discussed this extensively. The bullion banks sell paper contracts to push the price down. They control the market through leverage and manipulation. But paper manipulation only works if physical supply is available. If you sell a paper contract and someone demands a delivery, you need to produce the metal. The suppression scheme depends on the metal existing somewhere in the system. What happens when China removes 177 million ounces from the global supply chain? The paper shorts are now naked. They have sold contracts they cannot fulfill. They have promised silver that does not exist. The metal they counted on to cover their positions is now locked behind Chinese export controls. This is the moment the manipulation breaks. Not because of retail buying, not because of a Reddit squeeze, but because a nation-state decided to weaponize the supply chain and expose the entire paper scheme as the fraud it always was. The banks cannot print silver, the Fed cannot print silver, the COMEX cannot manufacture metal out of thin air, and China is no longer willing to provide the physical supply that kept the scheme alive. The reckoning is here. Global silver mine production is approximately 820 million ounces per year. Add a recycling and you get another 180 million ounces. Total supply is roughly 1 billion ounces. Global silver demand breaks down like this. Industrial fabrication, 576 million ounces. Jewelry and silverware, 234 million ounces. Photography, 24 million ounces. Physical investment, 263 million ounces. Total demand, approximately 1.1 billion ounces. That is a baseline deficit of 100 million ounces before the China export ban. Now remove Chinese refined silver exports from the supply side. We are talking about 120 to 150 million ounces that used to flow to Western markets annually. The actual number is difficult to pin down because China has been reducing exports gradually over the past 2 years, but the ban now makes it absolute. The new math looks like this. Available supply for non-China markets, approximately 850 million ounces. Non-China demand, approximately 900 million ounces minimum. Deficit, 50 million ounces at a minimum. But that assumes demand does not grow. Demand is growing at 5 to 8% annually due to green energy. More realistic deficit calculation for the next 12 months, 150 to 200 million ounces. Where does that metal come from? There are only a few sources. First, COMEX registered inventory, currently sitting at approximately 30 million ounces. That covers about 2 months of deficit at best. Second, London Bullion Market Association vaults, approximately 800 million ounces total, but most of that is allocated to specific owners. The unallocated, available metal is perhaps 100 million ounces. Third, ETF holdings. SLV and other silver ETFs hold approximately 500 million ounces. But draining ETFs to fill industrial demand creates its own crisis. ETF holders notice when the metal disappears. They start asking questions. They start demanding audits. Fourth, central bank and government stockpiles. Unlike gold, there are virtually no government silver reserves. The US sold its strategic silver stockpile decades ago. There is no cavalry coming. When you add it all up, the West has perhaps 12 to 18 months of above-ground inventory to cover the new deficit created by China's export ban. After that, the metal simply does not exist. And remember, this assumes no increase in investment demand. What happens when investors realize the supply situation? What happens when the mainstream media finally reports on the shortage? What happens when FOMO kicks in? Investment demand could double overnight. That turns an 18-month runway into a 6-month runway. This is not a theoretical crisis. This is a mathematical certainty. The numbers do not lie. The metal is not there. Now I need to address what you are hearing from the mainstream financial media, or rather, what you are not hearing. As of this recording, the China silver export ban has received virtually zero coverage in Western financial news. CNBC has not mentioned it. Bloomberg has buried it in a single paragraph. The Wall Street Journal has ignored it entirely. Ask yourself why. This is the single most significant supply chain disruption in the silver market in 50 years. A nuclear superpower just weaponized a critical industrial metal. And the financial media that covers every Fed statement, every earnings report, every tweet from Elon Musk cannot find 5 minutes to discuss it. This is not an oversight. This is deliberate suppression. The financial establishment does not want you to know about this. They do not want to run on physical silver. They do not want retail investors piling into a market they cannot control. They do not want the paper manipulation scheme exposed. So they stay silent. They hope you do not notice. They pray that you keep your money in their stocks and bonds and ignore the shiny metal that is about to become the most valuable industrial commodity on Earth. But you are watching the hidden mint. You're not getting your information from CNBC. You are doing your own research. You're connecting your own dots. And that makes you dangerous to them. The suppression of this story tells you everything you need to know about its importance. When the mainstream ignores something this significant, It is because they are afraid of the implications. They are afraid that if people understood the supply situation, the entire paper market would collapse. Do not let their silence deceive you. The export ban is real. The supply crisis is real. The reckoning is coming whether they report it or not. So what happens from here? Let me walk you through the scenarios. Scenario 1, the slow squeeze. In this scenario, the market adjusts gradually. Industrial buyers start paying premiums to secure supply. The spot price rises slowly, maybe 5 to 10% per month. Comics inventories drain week by week. The crisis builds in slow motion over 12 to 18 months until the physical market completely disconnects from the paper market. This is the best case scenario for the banking system. It gives them time to cover shorts, close positions, and manage the narrative. Probability, 30%. Scenario 2, the delivery failure. In this scenario, a major industrial buyer stands for delivery on COMEX and discovers the metal is not there. This triggers a crisis of confidence. Other buyers rush to take delivery before the vault's empty. The paper market seizes up. Trading is halted. Forced cash settlements are imposed. The silver price gaps up 50% in a week as the fraud is exposed. Probability, 40%. Scenario 3, the geopolitical escalation. In this scenario, the United States responds to China's export ban with its own actions. Sanctions on Chinese refiners, tariffs on Chinese solar panels, perhaps even secondary sanctions on countries that continue trading with China. China retaliates by expanding export controls to other critical minerals, rare earths, lithium, graphite. The trade war becomes a resource war. Supply chains collapse globally. Prices for all commodities spike. Silver becomes a national security asset. Government stockpiling programs are announced. Private ownership may be restricted. Probability, 25%. Scenario 4, the monetary reset. In this scenario, the silver supply crisis becomes the trigger for a broader monetary reckoning. The paper derivatives market collapses. Bank balance sheets are exposed. The Fed is forced to intervene. Money printing accelerates. Inflation spirals. Silver and gold are remonetized as nations seek stable stores of value. Prices rise not just due to industrial demand, but due to monetary demand. Silver goes to $100, $200, potentially $500 as it reclaims its historical role as money. Probability, 5% in the near term. But this probability increases with each passing month of crisis. The common thread across all scenarios is this. The price of silver is going significantly higher. The only questions are how fast, how high, and how chaotic the path. Now let me speak directly to everyone who has been stacking silver, everyone who has been called crazy, everyone who has been mocked by family, ignored by financial advisors, and dismissed by society. This is your moment. For years, you understood something that the credentialed experts refused to see. You understood that a world running out of silver could not sustain a price of $25 forever. You understood that paper promises are not the same as physical metal. You understood that when supply chains break, only those holding real assets survive. And now China has validated everything you believed. They are not banning exports because silver is worthless. They are banning exports because silver is priceless. They are hoarding because they know what is coming. They are cutting off the world because they need every ounce for their own future. The smartest, most strategic nation on earth just told you that silver is the most important commodity of the 21st century. They told you by their actions, not their words. Every ounce you stacked is worth more today than yesterday. Not just in dollar terms, in strategic terms, in survival terms. Do not let anyone gaslight you now. In the coming weeks, you will see the price manipulated. You will see paper smashes designed to shake your confidence. You will see mainstream articles dismissing the export ban as temporary or insignificant. Ignore all of it. China does not implement export controls on a whim. This is not a negotiating tactic. This is a strategic decision made at the highest levels of government after years of analysis. They know the supply situation better than anyone. They have concluded that keeping silver is more valuable than selling it. If China believes that, you should too. Keep stacking. Keep holding. Keep preparing. The shortage is here. The reckoning is coming. And you are on the right side of history. Before I close, let me give you some practical implications of this export ban. First, premiums on physical silver are going to increase. If you are buying, expect to pay more over spot. This is not dealers gouging you. This is the market recognizing that physical metal is worth more than the paper price suggests. Pay the premium. Get the metal. The premium will be irrelevant when silver is trading at $75 second. Availability is going to decrease. Popular products like American Eagles, Canadian Maples, and name brand bars will become harder to source. Buy what is available. Do not wait for your preferred product. Silver is silver. An ounce of generic rounds serves the same purpose as an ounce of premium coins. Third, delivery times will extend. Mints are going to struggle to source raw materials. Expect delays of weeks or months on new orders. If you see silver in stock, buy it. Do not assume it will be there tomorrow. Fourth, consider the storage implications. If you're accumulating significant quantities, think about secure storage. Home safes, safety deposit boxes, private vaults. Do not advertise your holdings. Security becomes more important as the value increases. Fifth, think about jurisdictional diversification. If the US government decides to restrict silver ownership or impose windfall taxes, you want some metal outside their reach. Singapore, Switzerland, the Cayman Islands all offer secure storage options outside US jurisdiction. Sixth, do not sell. I cannot emphasize this enough. The temptation to take profits will be strong as the price rises. Resist it. The supply crisis is just beginning. The price increases you see today are nothing compared to what is coming. Hold until the fundamental situation changes. That could be years away. They looked at the global silver supply. They looked at the industrial demand. They looked at the green energy transition. They looked at the competition with the United States, and they made a calculated decision. They will not share. This is not about money. This is about power. This is about who controls the future. This is about which nations industrialize and which nations decline. And silver is at the center of it all. The 177 million ounces that used to flow from Chinese refineries to Western markets is gone. The paper derivatives that depended on that metal are now exposed. The manipulation scheme that suppressed the price for decades has lost its physical backing. The reckoning we have been waiting for is here. Not because of speculation, not because of hype, but because a nuclear superpower decided to weaponize the supply chain. If you are holding physical silver, you are holding one of the most strategic assets on Earth. You are holding something that China is hoarding. You are holding something that the green energy transition cannot function without. You are holding something that cannot be printed, cannot be faked, and cannot be sanctioned into existence. The hidden mint is revealing its secrets. And the secret is this: the world is running out of silver, and those who have it will prosper. Keep stacking, keep watching, keep preparing. Subscribe to the Hidden Mint for ongoing coverage of the supply crisis. Hit the notification bell. The situation is evolving rapidly, and I will be here to break down every development. Until next time, protect your wealth. I will see you in the next one.